So I'll request Raju to go on to the last topic, taxation, because ultimately whatever you earn, everything goes on to taxation, and that's where we can save a lot. And believe me, chartered accountants will never tell you 100%, and even they don't know 100%. Thank you.
Yeah, as far as saving the tax is concerned, the biggest earner of all the money is the government. So they make the most of everything. Whatever transaction you do, they make the most of it. But we should try to see how we can at least save the tax legally. Thing is, if you are earning legally, you can save only very little, and there is no way we can recommend to do anything illegal. And as I said, we are all doctors and we are all trying to learn these things, and we are just that we have learned these terms maybe 1 or 2 years earlier. So we are not qualified tax advisors or chartered accountants. So consult your chartered accountants, but it is important you ask the right questions. So just like when the person comes to sell you the insurance, he is actually selling for his benefit, and he'll never tell you a term insurance. When the time you ask them, you give me term insurance, you ask them and tell them that you tell me about term insurance, they'll show their true colors. That's what happens. So let us see, you buy this laptop as an individual doctor. The cost of the laptop is 1 lakh, you pay 18% tax, and the total cost is 1,18,000. Now if you are in the 30% bracket, actually we need to earn 1,68,000 to buy that laptop, because that is how much the tax we have to already pay the government to have that 1 lakh with us. So 1,18,000 with us. This is how it actually works. So the cost of the laptop was 1 lakh, you paid 18,000 tax, but you have to earn 1,68,000 before you can buy that, because you have to pay the government also for that if you are in the 30% tax bracket. But if you are having a private limited company and you are buying a laptop, you can buy it through the company, and this becomes a part of an asset, and you can claim depreciation also for that laptop. So this is the difference. I'm just trying to put a perspective into how to change our thinking about the various things that we need to do. So what are the various sources of income? So they are all clubbed together, and we should know how they are taxed and how we should save based on whatever is possible. So income group for doctors typically comes in 2 types. One is a salaried, others are professional fees is what you take. So professional doctors, most of us are in the professional fees category, and some of us in medical colleges will be on salary basis. The doctors working in private setups and freelancing will come under professional fees. So when you are calculate income from all your sources, that is income from salary, house rent, then anything that you sell, that is capital gains, then business professional incomes. So each of them are actually treated differently. So income from sources, so all of them are put together, and income from investment. Now you learn to do an investment, then whatever you sell and make profit also will be subjected to taxes. And for advanced people who are doing futures and options, this also comes under the business income, and they will all be taxed. So you to maximize, so you need to see the tax deductions where all it's possible, tax saving instruments. All these things are available, but we should understand that there are this PPF, NSC, ELSS. So you need to invest into them to get the tax benefit. Important is to also file returns on time. If you don't file returns on time, again you lose the losses, that whatever you have to offset your losses, if at all you have, you will not be able to do it. So file your returns on time. Then these are the various house rental allowance, then education loan interest, home loan interest. There are under various sections you can all claim. So most of the things will be helped out by your CA, and also then you can ask them, if you ask them to file an income tax, so they'll file it just like that. But you should again find out what is beneficial for you, whether it's the old tax regime or the new tax regime. So just go through that and see which one is better. And the new tax regime, there is no deductions are available for you, although they have increased the slab rates. So if you are in the total deductions are 1.5 lakhs or better, then the new tax regime will be beneficial. If your total deductions are more than about 3.75 lakhs, then the old tax regime will be beneficial. And if it is in between, then it will also depend on your income level. That's what would be the calculations. So there are various calculators also available on the online. You can go and see how it works out, and then whatever is suitable for you, you understand, you take them. So old tax and new tax regime, that you should be aware of that. And also depending on the age, they say the slab rates will change. So I think most of us will be aware of these things. So all the subheadings we need to see, and what are all the available choices in the old and the new tax regime can be compared, and choose it in consultation with your tax consultant. And as I told you, these are the various deductions that are available. Sukanya Samriddhi is one thing that you can all consider, especially if you have a small kid, girl child. So this is one thing that is very, very beneficial as an investment also, as far as a tax efficiency also. Then one more thing is the presumptive taxation. This is one thing that gives relief to small taxpayers from the tedious job of maintenance of book of accounts. So you are supposed to maintain the book of accounts, but you can use this presumptive taxation under 44 AD ADA. Here it is eligible for persons who are doing these kind of professions, medical, legal, and gross receipts or turnover during the financial year not exceeding 50 lakhs. You can file it under this scheme. So all you have to do is to take 25% as your expense, and for the amount remaining, you pay it as the tax. For LLPs, and it is not possible, but however for individual, HUF and partnership firms, the the amount is up till 2 crores. So if you are having opticals, you can do it in the name of your HUF or in the name of your spouse. So in that way you will be able to segregate the things and take the benefits also of the taxation. Next is when you are selling any asset, so you get what is called as a capital gains. Now the asset can be in the form of a short term gain if you are holding it for less time, or for a long term time, especially when you are doing stocks. So all these things will be there. So I will not go into too much details of these things. Again, your gold or listed shares, equity, they are all based on number of years you are holding. For gold, it should not be, if it is less than 3 years, it is considered as short term. For the stocks, if it is less than 1 year, it is considered short term. And short term and long term are taxed differently. So that also we should be aware. Then other thing is, who have been into stock market for long time, maybe some of us might have started 10 years or 15 years ago. Suppose you bought something in 2018, there is something called as, before 2018, there is something called as grandfathering. So if you bought a share at 100 rupees in 2016 and you sold them at 150 rupees, you actually made a profit of 150 minus 100 is 50 rupees. But actually, if there is this grandfathering, if you know about it, and you can apply for that, and there is something called as a fair market value of that share, because the rule changed in that year, and whatever you have bought it before 2018, you have to calculate the fair market value as on 2018 January 31st, and you only have to pay a tax on 25 rupees, not on 50 rupees that you had, because the fair market value of that stock was 125 rupees in January. Again, sovereign bonds are very tax efficient. You can use that. And other thing is the indexation. That is one thing that I wanted to tell. Indexation is that suppose you bought a land, say at 10 lakh rupees, and in the year 2022 you sold it at 20 lakh rupees. So if you don't know what is indexation, you will be calculating as 10 lakh rupees of profit, but it is not actually that. That's not actually that. The indexed cost of that is actually 22 lakhs. So in fact you have made a loss on that, so you don't have to pay any tax on it. So this is what are the things that we should keep in mind, understand, and ask our tax consultants whenever we are doing disposing properties that you have taken. So indexation cost and expenditure that you have incurred also can be subtracted. I think for the lack of time we'll cut short. Thank you so much.